when that child turns 18, the resources, the income of the parents are no longer deemed available to them. So let's say that they qualify for SSI, right? So supplemental security income, as well as Medicaid. Now, in a lot of cases, what I'll see is that adult now with special needs will continue to live. They may continue to live with the parents, right? If that's the case, then they can still receive supplemental security income. It will be reduced to some extent.
Branden Ducharme is an investment advisor representative of and offers investment advisory services through SCF Investment Advisors Incorporated, an SEC registered investment advisor, 10150 Meanly Drive, first floor, San Diego, California, 92131, 800-955-2517, www.scfsecurities.com. SCF Investment Advisors Incorporated and Ducharme Wealth Management are separate entities. The information in this podcast is current at the time of recording. It is based upon sources and data believed to be accurate and reliable. The information, opinions, and forward-looking statements expressed herein are subject to change without notice. Moreover, all comments and opinions voiced herein are for informational and entertainment purposes only and are not intended to provide specific advice or recommendations and should not be interpreted as such. Further, the opinions expressed are Branden Ducharme's and his guests and do not reflect the views and opinions of SCF Investment Advisors or any of its affiliates. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what is appropriate for you, consult your financial professional. This information is not intended to be a substitute for specific individualized tax or legal advice. Ducharme Wealth Management and SCF Investment Advisors do not provide legal or tax advice. These services are provided by separate entities. The guest speakers featured in this podcast are not affiliated with SCF Investment Advisors, nor are they affiliated with Ducharme Wealth Management unless otherwise indicated.
One of the things that I don't understand about special needs planning super in-depth is the public benefit side, right? And obviously you have a kind of a special designation that you carry in regards to special needs planning and helping families that have that component to their financial planning needs, right? In particular, probably you see a lot of special needs children, right? When there's special needs children involved, whether they're small children, minors, or, adult children that still have some level of, dependency upon others, right? Can you help me understand what the difference between somebody that's resource dependent and not resource dependent? What does that mean for a family that's going through that?
So that's usually where I like to start with a conversation around special needs financial planning. Is the nuances really depend on, or are really about making sure that you're maximizing any public benefits that are available to you as a family, or specifically to your special needs loved one. So there are resource-dependent public benefits that there's resource-dependent and then non-resource-dependent, as you mentioned. So the non-resource-dependent public benefits that we all know of is Social Security disability income, and Medicare, right? And then the resource-dependent public benefits are going to be your SSI or supplemental security income, and then as well as Medicaid. So really a big part of special needs financial planning is making sure that that the individual in question, the individual that has special needs, it qualifies to the extent that they can to receive SSI and a lot of times, more importantly, Medicaid.
Okay, tell me more about that. What makes somebody qualified or not qualified in a broad sense?
Yeah. So the qualifications for SSI, and let me take a step back and say this: Some of this is going to be state dependent because, of course, Medicaid is state ran. So there's going to be some differences depending on the state that you're in. But generally, if you qualify for SSI, you are qualified for Medicaid. At least that's the case in the state of Georgia. And again, other states might be different. The resources in question are with regards to your income and your assets. So your income has to be below a certain amount, and then assets have to be below a certain amount. The assets one is really kind of an archaic law. It's not kind of, it is. For an individual, there's a $2,000 limit as far as assets. So an individual with special needs cannot have more than $2,000 in their name. And that limit has been the same since the 80s.
And is that what about minor children, right? Because minors don't normally have really anything in their name. So does that carry over to parents?
Yeah, so good question. So for a minor, the income and resources of the parent are deemed accessible to the minor, right? So what you find is that in a lot of cases, if there's a minor that has special needs, they do not qualify for SSI, right? Supplemental security income, because, their parents have, might have more than $2,000 and my income might be above a certain threshold. Once that child turns 18, the income and resources of the parent are no longer deemed available to them, right? So it's at that point that many families will go ahead and apply for SSI and for Medicaid for that individual.
So you're saying somebody that does have resources or does have assets, they wait until the child's 18. Once the child's 18, that's when they go and apply for your public benefits, because they'll no longer be resource dependent upon the parents that do have some assets. I'm
correct.
Following the conversation there correctly. Okay. So there's not something where you, when you talk about like resource dependent or not resource dependent, it's not really a conversation of, how severe is somebody's, disability or special needs, right? To say this person has something more severe, so they, they're going to be resource dependent and need more public benefit. It's kind of a more of a you qualify for public benefits under a certain list of conditions, right? And doctors signing off on things or whatever, or you kind of don't. And then from there, it's kind of carving into resource dependent or not resource dependent. Am I following the conversation correctly there?
Yeah. And so you mentioned, you brought up a good point. So the qualification for disability in that sense is different different for a minor than it is for an adult. Okay. So for a minor, there's a specifically worded definition. I won't delve too deep into that. But for an adult, it's basically the idea that this person cannot earn an income equivalent to whatever the poverty limit is. Right.
Based upon a medical condition that they have.
Yeah, based upon a medical condition that they have.
Yep.
Yeah. Yeah. But it's based around their ability to earn income. And honestly, I mean, I've had cases where that puts somebody in kind of this gray area. I don't know if you've ever, had a client like this, but I had one client years ago that was in some type of accident where I guess their capacity to reason and to make judgments was diminished, but it was a tough time getting something medically diagnosed, and this person was able to continue working a job, right? But they did need guardianship. So in that type of case, that person would not be eligible for these resource dependent public benefits.
But they may qualify for not resource dependent public benefits, is what you're saying in that case, or No, because they were able to work.
Yeah. I mean, we all qualify for the non-resource dependent public benefit, like Social Security, right?
Sure.
We're all eligible
Okay.
for that. Medicare, we're all eligible for that, right? So special needs planning is it's getting into those resource dependent public benefits. And again, the idea that you can't make over a certain amount, you can't have over a certain amount in your name. So how does one plan for the care of somebody without them having assets in their name?
Yeah. So let's continue on the conversation, because I think that's something people really struggle with, right? Especially if you are in a weird kind of limbo where maybe you're right on that edge where, you have, and I say this because I've seen it, maybe you make a relatively decent income, you're towards that upper threshold. You would have some discretionary income to maybe, save and invest for your future and, put money away for retirement. However, because retirement assets are looked at as a, asset and resource for the testing purposes, they feel that, they just have to live more in the present, in the moment, and they don't have always, they have, or maybe don't know how to go and save and invest for the future in a way that doesn't affect the benefits that their children need. Right.
Yeah.
What's out there? Where does somebody go? What do they look for? What are the options?
Right. So I'll give you kind of the typical trajectory of from the perspective of a parent, a special needs parent, which I am, that, maybe you're planning for the long-term future and care of your child. So again, when that child turns 18, the resources, the income of the parents are no longer deemed available to them. So let's say that they qualify for SSI, right? So supplemental security income, as well as Medicaid. Now, in a lot of cases, what I'll see is that adult now with special needs will continue to live. They may continue to live with the parents, right? If that's the case, then they can still receive supplemental security income. It will be reduced to some extent. Okay. The question is really about how you plan for when you're no longer here, right? And so that's where things like special needs trust come into play. And that's where things like ABLE accounts come into play. So special needs trust are basically a type of trust that are set up for an individual that is receiving resource-dependent public benefits. And money left in that special needs trust, or money placed in that special needs trust for that adult, is not counted towards the resource limit.
And so is that typically an irrevocable or revocable trust structure? I imagine that's probably...
Yeah. Irrevocable, yeah. Special needs trusts are typically irrevocable.
Yep.
A lot of cases, I'll tell you, they're set up as testamentary trusts. Because again, if that child, now adult, if their needs are being met to an extent, with the help of the parents or other family, the trust may not technically need to exist until the parents have passed on and they're leaving assets now for the care of that child. Mm-hmm. So if it's set up as a testamentary trust within the will, then they pass away, the trust is created, and the assets or in life insurance or whatever it is goes into that trust.
Okay. And there's different kinds of trusts or different structures you kind of use here. And you've touched on, again, testamentary or something established while you're alive. But what about controlling parties or controlling interests who can who can have kind of control over funds and decision-making authority on funds for the beneficiary, and have it not affect, or maybe it does affect the ability for somebody to qualify for benefits?
Yeah. So, I mean, obviously you have to have a trustee like any other trust.
Mm-hmm.
The trust, it's not so much as there's different types of special needs trust, but I mean, you can either stand it up while, you know, as the person setting it up, right? You can either set it up while you're alive, or you can have it to be set up, you know, once you pass away. There are certain things that the trust can and cannot do. There's certain things that the trust can and cannot pay for. The big one is that a special needs trust, cannot pay for food and shelter technically, right? Because technically, if that person is receiving SSI, supplemental security income, that is supposed to provide for their food and shelter.
So a strategy that wouldn't likely qualify, or maybe shouldn't, would be in the event that maybe if somebody is going to fund a trust through various means, and say, well, so when we pass, we want to make sure that, you know, our child with special needs has money out of this trust to purchase a home, right? Maybe that may not fly, but maybe there's different ways to structure that. I'm not certain. There's always the plan for different goals, right? But that'd be a quick one that they're probably trying to shut down, right?
I figured that was going to be your question. There is a way, and this, you know, I'm you know, obviously I'm a charter special needs consultant. I'm not an attorney, but I do know that it is possible to place a home in, or have a special needs trust to own the home.
So so you could put the funds in the trust, and the trust owns the home.
Correct.
Okay. That's an interesting concept.
Yeah.
Obviously, you know, we're not talking legal advice here, and all this stuff needs to get, you know, you should have an estate planning attorney. I think we both feel comfortable making that recommendation to anyone that has special needs considerations within their families, is have an estate attorney to help with these types of matters. Especially when we start talking about state-specific type programs. Bring me up to speed on what an ABLE account is.
Sure. So an ABLE account is a specific type of savings account that, again, an individual with is receiving resource-dependent public benefits can set up and can use, and the assets or the money inside that ABLE account does not count against them for those resource-dependent public benefits. It's set up under the same structure as 529 plans. So each state has their own specific ABLE account, or 529 ABLE account, and there is generally a limit of $100,000 that can be held inside this account at any given time. Anything over that counts as a resource.
So do you normally get a tax deduction if you place funds into the ABLE account for the benefit of a qualifying individual?
Well, just like a 529, it's not a federal, but if a state offers a tax deduction, then yes.
Okay. And the income with it would then compound without, or, you know, increase without having tax consequences, right? There's no taxable events that come from within the account. How are distributions treated on an ABLE account from a tax purpose?
Yep. Distributions can be used for, you know, a variety of different things. You know, so it basically just operates, you know, including education, just like in 529 plans. So yeah, it operates just like a 529 college savings plan. Again, the only the contribution limits rather are the same on an annual basis as as a 529, a regular 529, with one key exception. that limit, which I believe this year is $18,000, that's a hard limit for the account itself. Whereas, 529 college savings plan, as you know, you and I could contribute that, that $18,000 or whatever it is, towards the same account, right? If it was a ABLE account, then $18,000 is the max that could go into that.
Oh, okay. So you're saying, so in 529s, right? And just to clarify here, you could put $10,000 in, say me and you had the same nephew. We don't, but say we did, you want to put $10,000 in, and I say, hey, that's so nice of you. I'll put $10,000 in. We can both put $20,000, so now a joint $20,000, which would be over the limit otherwise. Right. But an ABLE account, if you said, hey, I was super, had a great year. Now assuming this, we had a special needs nephew, he said, I put $15,000 in his ABLE account for him. And I said, well, that's great. I had a great year too. I'll put 15,000 in. I couldn't. I would only be able to do $3,000. You can bring it up to the 18. You can't.
Yep.
Gotcha. Perfect.
Correct. Correct.
And so how does somebody access an ABLE account? Where do they normally find those?
Well, yeah, I mean, again, they're state, they're state ran.
Okay.
So, there is a, I don't have it offhand, but there's a national resource website for ABLE accounts.
So you go there. It's a pretty intuitive to probably set up and deal with that way. If that's something you're interested or wanted to look into, there's a lot of resources out there. I imagine if somebody Googles ABLE account and then their state, there's probably plenty of resources that come up, and then, take those resources and talk to your financial planner about them. And see where this might fit into your plan. So I threw into my favorite ChatGPT, and I asked it the wrong question, which you pointed out to me when I kind of asked you about me doing this. But I'd already done it, and I asked it about, what are the concerns, the top concerns that people have when they're doing. And I said special needs planning, and I think you highlighted that it might have been more appropriate for the conversation to just highlight special needs financial planning. And I think it really has this focus. One of the top concerns was the long-term care and support of their special needs children, right? And so I think when it's talking about it in my mind, what that came up is, well, given enough money, you can pretty much always find the resources, right? There's a lot of resources out there now. If you're talking about different therapists or doctors or whatever, right? But they cost money, and they cost, if you're, and I'm thinking about even you boil it down to, well, what if somebody isn't able to transport themselves, right? They don't have a driver's license. How do they get to the appointments, right? Now there's a cost in, it's one thing that maybe Medicare or Medicaid will pick up the cost to have the appointment, but what about the cost to get to the appointment, right? Who's driving them? Who's doing that? Like, who's taking care of people that way? Is there anything that you've found particularly helpful in kind of funding those needs? Is that where you use something like an ABLE account to, provide provide resources for those expenses that are kind of ancillary to the more commonly thought of expenses?
Yeah. So the first thing, or one of the first things I would always say to, especially to like somebody like a family that maybe is, they've received a new, what's a new diagnosis to them, or they're, just not sure where to start, is to tap into your local support or organizations. All right. For, whatever your child or your loved one's, disability may be, whether it's Down syndrome, cerebral palsy, autism, whatever it is. There are a host of resources on the state level, on the county level, that can be accessed for things like like transportation. I mean, I remember seeing an organization that provided grants for folks who needed to obtain like a mobility access, or I guess a van that could hold a wheelchair, right? So lots of different things like that exist at the state and local level. So one part of your question, I would say tap into to your local support organizations. There's lots of support out there. But for the bigger conversation, which is more so, kind of what I deal with in terms of financial planning, it really comes down to how you think about retirement planning, right? So if you're thinking about retirement planning, in a traditional retirement planning scenario with software, you're planning maybe to age 90 or 95, right? And, you want to provide X amount of income over the years. You're taking into account Social Security, any pensions you might have, and then, of course, the tax implications from the money that you're drawing from your IRAs. You're looking at whether Roth conversions make sense, the whole nine, right?
Mm-hmm.
If you have a loved one with special needs, you also may have to plan for not just your lifetime, but their lifetime as well, right? And so that's where things like, obviously life insurance, comes into play. That's where estate planning comes into play in terms of, if you have a special needs trust that's going to be funded at your death, well, how do you fund that? Do you fund that through life insurance? Do you fund that through your IRAs? One thing, one nuance, especially with financial planning, that I always try to make people aware of is, how the stretch provision in most cases was eliminated for inherited IRAs, right? One of the cases in which you still can use the stretch provision is when the beneficiary is someone that has special needs. So they can stretch distributions from that inherited IRA out over their entire lifetime, as opposed to having to drain the account in 10 years, right? So, and again, we're kind of keeping this high level, but those are the kind of nuances for, retirement planning and estate planning that I think come into play and would really help to kind of answer that question of providing for that person over the long term.
So in a sense, it's almost becomes, to a certain degree, and not to oversimplify this, but what you're saying is, if you have a special needs child or loved one that you care for financially, and beyond your own retirement and death, you want to continue to do that, and say that they have a life expectancy of another 20 or 30 years beyond yours, your retirement planning almost now, in a sense, and there's going to be some minor, there's going to be some tweaks kind of to income and expenses, but you're more so, instead of planning for a life expectancy of 100, you're planning for 130, because your assets need to cover the whole way through that additional lifespan, and then I think what you're saying is you're needing to layer in the right legal documents, so that way when you do pass, because we all pass eventually, there's a legal framework in place to carry the assets forward for the benefit of the correct people in the correct manner, and
without jeopardizing the resource dependent benefits that they're having. Another wrinkle that I'll give to you as far as the financial planning piece of it, and I actually spoke about this in an article recently. A lot of times when we're doing retirement planning for folks, and we can kind of run some calculations as far as whether or not it'd be best for them to start taking Social Security at 62 or waiting till 67 or 70 or whatever the case. We talked about SSI for that special needs child or young adult. One of the things that's important to bring about is that once the parent begins taking Social Security, their child is now eligible for Social Security disability income, okay, which typically is much more than supplemental security income. Okay, so what I'm saying is that in the case of somebody that has a special needs child, a lot of times it makes sense financially to look at starting to take Social Security a little bit earlier rather than later, right? Because your child will get a higher benefit, and so overall the household's gonna get a higher benefit, you know. And then of course, once you die, then that child is eligible for survivorship benefits as well.
Okay. And is there a way that children can, or you know, either minor or adult children qualify for Social Security disability before the parents file for Social Security?
No, because because again, the Social Security or the SSDI is a non-resource dependent benefit, right? So it's attached to Social Security.
Okay.
Right.
Okay. What other? I mean, what are the landmines that you kind of see in people's plans with planning around special needs that, you know, maybe people don't talk about enough, or if they, you know, miss this one idea or thing, it can really have a major adverse effects.
Yeah. We've touched on some of them. As far as Social Security, the Special Needs Trust is a big one. I've talked to clients that have tried to accomplish this by setting up maybe revocable trusts or trusts that are not designed as Special Needs Trusts. That's not going to have the same. It's not going to do the same thing, right? So the Special Needs Trust is a big one. The management or coordination of public benefits is a big one. Life insurance is a big one, right? So if part of the plan for providing for that loved one after you're gone is through the use of life insurance, a lot of families will look at things like second to die policies, mm-hmm. right? And then also, I just personally, what I've seen a lot, most special needs families are their ability and capacity to earn is impacted by to some degree. Mm-hmm. Okay. And what I mean by that is that, one parent is making a concession in their career so that they can be more available for the child. Okay. Whether they are, doing things to support them in terms of their education, or, maybe even one parent might be a full-time caregiver. Right. So I see that a lot. One of the things, one of the big landmines, as you call it, that I always do try to encourage folks to do is to make sure that the life insurance policies that you have living benefits associated with them, right? Because oftentimes when we look at life insurance planning, it's often based around a person's income. Well, if there's one parent, let's say it's one parent that is providing care for the child to the extent that, it's not feasible for them to be employed otherwise, well, there's no income there to base a life insurance assessment off of. And so you kind of have to think about that and adjust accordingly. Also, if that person is not employed, then they don't have disability insurance, right? But then what happens if they get hurt or if they get sick, yeah. Right? And so, having the right amounts of coverage and, adding the living benefits piece is something that's a conversation I'm having a lot as well.
Yeah. What kind of living benefits are you typically most importantly looking at? There's a lot of, I just think living benefits is a term that is so easily thrown around on social media today by the huge influx of insurance agents that are licensed, but maybe don't understand the complexities of advanced planning. And I feel like living benefits to me almost is a key word when I hear it. Oftentimes it's somebody, following it up with a sales pitch and not always doing the correct planning ahead of time. They're selling they're selling a benefit or selling a feature. They're not, doing planning and getting what's needed, and what's most appropriate. And, I know you well enough, Greg, to know that that's not you or your approach. But I want to maybe more definitively clarify or talk about like, what are the living benefits? Because there's so much misinformation around them, and this is such an important topic that you really want to make sure that you get the right riders and benefits. So that way, if you are choosing to put your money into some of these policies as a strategic part of your plan, you're getting the benefits that you do need, and they will be there, or hopefully will be there when you need them.
You're right. That term is can be used in a number of different ways. I'm really referring to there's different terms for it, but chronic and critical illness riders. So
okay.
If God forbid, cancer, heart disease, things like that, it covers and it allows you to access a portion of the death benefit, to help out with those kind of expenses. There's also straight disability insurance riders that you can get with some life insurance policy that will pay you, a certain amount, X amount per month for a period of time. So those can be added as well. And you mentioned something about social media and you see a lot of people that talk about all these different things you can do with life insurance policies. I always tell clients this, the first thing you need to be concerned with is the death benefit, right? Mm-hmm. Making sure you have enough insurance, right? I see a lot of people that will, was it this infinite banking stuff or be your own, whatever, that type of thing. Yeah, people that want to try to do that, and they're setting up these policies, and maybe want to overfund them. But when you look at the death benefit, you don't make it home tonight. What happens? How much does your family get? This amount. Okay, yeah. This is not enough. This is not enough.
Okay? I found that I found that if you use those policies for the death benefit too, that they don't stand on their own. Especially in a case like this, right? So I'm thinking about if you're, if you're the primary breadwinner and you're trying to replace or put into place a life insurance policy to cover your debts, provide an emergency reserve or an emergency fund for your family, replace your income for the rest of your career, and provide for the added additional expense that your family has to incur as a result of having special needs loved ones that you want to provide for, right? That sometimes so easily stacks up to $2 to $3 million, easy, right?
Yeah,
easy. And the cost to get a permanent policy that would provide that amount of death benefit and be able to max fund it to where you can use it for one of these other concepts that people are talking about all the time, like, infinite banking or being your own bank. It is so draining on the liquidity for most people, right? And if they try to do that, it really can dip into the rest of their planning and derail the whole thing because they're so heavy in one idea or concept. And so what I like to look at is a combination of both term and permanent life insurance, right? I think there's an appropriate blend to do there. one of the things that I like about permanent life insurance in these types of cases is that you are oftentimes looking to make sure that you need a guarantee that when you pass, there is going to be funds available for somebody with special needs, that you want to guarantee that those funds will be there. Right. And that's what life insurance does. Yeah. Term doesn't necessarily do that so well because there is there is an end to the term, right? The permanent policies don't really carry that. So I've seen those be used quite effectively in special needs planning cases. And the other thing that I'll just highlight, and I just feel a moral obligation to say this whenever the topic comes up, right? Around the, infinite banking and be your own bank policies and all this. They're so wildly oversold. And you're absolutely right, Greg. The death benefit is the primary purpose of those policies. Everything else is just an added benefit, but it's so easy to overcommit to one idea. And if that doesn't pan out, it really, really can derail someone's financial plan with or without special needs considerations. Just really be careful about how much you're sinking into, permanent life insurance contracts, that it's being used in an appropriate manner, in relationship to the rest of your, financial plan, your cash flow statement, and your net worth, and all things are in alignment with that. Anyways, I have to always get that off my chest. I think TikTok and Instagram and all these places are so wild these days with people trying to sell everyone everything, and there's some really great products out there, financial products, but there's no product that's for everyone. So,
I think you hit it on the head. A lot of time, for, this is kind of, basic financial planning, but when you have younger kids or younger family, then you probably need some term to get to the $2 to $3 million that you probably need to provide for your family through adulthood, right? But when you're talking about planning to fund a special needs trust, right? Like when you die at 90, you do need that is where permanent insurance comes into play, and so. It's different tools for different needs.
Yeah, absolutely. So you have to have all the tools in the toolbox. And it sounds like what I'm gathering from this conversation today is that special needs planning is both not too far off from traditional financial planning or, in concept, but in implementation, there is some nuances that can make profound impacts. And you want to make sure that you get those right. Is that a fair assessment?
Yeah. And I mean, what I can say in kind of closing is I have this have this kind of slide on some of the presentations that I do. You're about to get on a flight, and they've got the masks on, and they're showing you how to put it on, and what do they tell you? They say, look. And if these masks drop down, put your mask on first before trying to help somebody else, right? And so I like to encourage people that often the best thing, one of the best things that you can do, that all of us can do, but certainly for special needs families, or if you're the parent of a child or a loved one with special needs, one of the best things that we can do is to make sure that we're doing the right things with our own financial planning, in terms of, maximizing our employee benefits, funding the 401ks, taking a look at, Roth conversions, seeing if that's appropriate. And then, we're both members of NAIM, the National Association of Active Investment Managers. So taking a hard look at your investment strategy, making sure that you have a strategy to manage through, make sure that you're properly exposed, have proper market exposure, when the market is trending, and then also, downside protection, right? Because you could do everything else right, but if your investment strategy is comes up short, then it's definitely going to change some things.
Well, and everyone has different planning objectives around that, but I see sometimes where people, they don't want to participate in the market at all because they're, worried about market risk or market conditions. And oftentimes it's not about the market risk over the long term. It's more about the market risk over the midterm, especially when they start having circumstances in life that are that could allude to them needing access to funds sooner kind of rather than later, right? It's pretty easy to weather a 2008 style event if you're 25 years old and have a steady job and you're just putting money in your 401k. It's actually, not to minimize the pain people felt in '08, but for a certain profile of person, I mean, it was really great financial tailwind, for people that were starting to invest at that time period or had just started investing it within the first, couple of years prior. But as you start seeing, well, that's not 30 or 40 years out anymore. That's 10 years out or 5 years out, and in this space, in the case of people that have special needs loved ones, it is, well, this could always be, money that we may need access to within the next, 2 years, 3 years, 4 years. The timeframes could pop up on us. And so we don't feel we can weather the same risk and volatility of the market. So, we're really savers more than we are investors. And what that introduces is a lack of risk in the long-term plan. And in order to have any kind of reward or gain in the markets, right, we kind of understand there's this fundamental principle that you have to have some risk. So not all risk equals more return, right? Risk just equals the opportunity for more return, right? But being able to have professionals on your side that help you understand different types of market exposure, maybe a different way to layer assets and using asset location, coaching through the behavioral side, but then coupling all that with some really good different ideas and concepts about how to be involved in markets and having a way to get out of markets and back into markets, or changing positions within markets, or changing ideas and not having to be married to one concept or idea. And everyone's different. And most people that know me I'm not a big buy and hold guy. My grandfather was the opposite. He was an extremely big buy and hold guy. He, when he passed, my dad and sister had to redeem his paper shares of IBM. That's about as buy and hold as it gets. But I just see for most people that doesn't seem to really line up with what their expectations or concerns are. And I think you're right. Having somebody that can help you keep the right amount of market exposure in the right times. Not to say that it ever, guarantees anything. Neither of us are in the business of guaranteeing stuff. Right. But
it's all about giving you the best chance or opportunity to to maximize the resources that you have. Right. Yeah. It's all about doing the best job you can with the resources that you have.
Well, yeah. And unfortunately people always, not always, sometimes people want a very optimized plan or program, right? Like I want to know that I'm not missing a single cent here. I'm perfectly optimized. I am getting the best risk adjusted return, or the highest return or whatever. And at the end of the day, it's just, you could put all that stuff in a spreadsheet or in a software and make it look like that's the case. At the end of the day, things change so fast in this world, right? Markets change, political environments change, public benefits change, standards change around those benefits. There's so many medical conditions change, family situations change, right? Jobs and careers change. There's so much. And so it's a process, right? This is what they call it, financial planning, not financially planned. Right. You got to put some stuff in place, but then you got to monitor and update those stuff. It's an ongoing process. That's why I prefer the term wealth management. And wealth is subjective. I don't call it, $10 million, management. It's wealth management, and different people have different ideas of what wealth is to them. And, but you have to go through a process to manage that and manage your benefits and manage your, asset allocation and your asset location and your tax liabilities and the tax advantages you can take, and manage who's on your team for those things. Right. Because, and I think this is something that you would really agree with, being in the space that you are, right, is, it kind of goes back to the saying, like, it takes a village, right? It's not just, you're not the guy for, special needs, financial planning, right? You're kind of the team captain, if you will. But there's so many other people ancillary that are really important to work with, right? Good accountants that understand your situation, and good attorneys that understand your situation, good caregivers that understand your situation. Probably your banking professional. I always tell people, your mortgage lender, your real estate agent, your banker, your estate planning attorney, your business attorney, if you own a business, your CPA, your bookkeeper. All these people, like, they're all part of the team, and you have to assemble a team, and you have to assemble a good team that is looking out for you and cares enough about you and your loved one that it can all be built into a plan that you feel comfortable that even if something happens to you and you're not around to look after your loved ones, someone is, to some capacity, Yeah. So. Absolutely. Well, appreciate you hopping on. You have a depth of knowledge, Greg, in the space. I always appreciate it. I've always been able to tell from when we first met a couple of years ago that you're somebody that really so deeply cares about people. And I've always appreciated that about you. So, I think that just your addition of the Chartered Special Needs Consultant designation, I think, continues to highlight that. And it really shines through in your personality and your approach. So I really can't highlight enough how much I appreciate that there's people out there that do, think and care about people in the way that you do, Greg. So thanks again for hopping on and sharing the depth of knowledge that you do have.
Yeah, I really appreciate it, man. Appreciate the opportunity to have the conversation on your platform, and keep doing what you're doing, man. Doing some great stuff.
Investing in real estate and securitized real estate may not be suitable for all investors and may involve special risks such as limited liquidity and demand for real property. Changes in supply and demand for real property, change in law, tenant turnover or defaults, loss of investment, competition, casualty losses, use of leverage. Real estate values may fluctuate based on economic, environmental, and other factors. There is no assurance that the investment objectives of any real estate program will be attained. There are fees associated with education savings plans, including 529 plans. Investments involve risks. You should consider your financial needs, goals, and risk tolerance prior to investing. More information about ESA and 529 plans can be found in the issuer's official statement or plan disclosure document, which should be read carefully prior to investing. Many 529 plans are sponsored and administered by states. State tax benefits vary among the states, and some offer residents additional tax benefits if they invest in their own state plan. Consult a qualified tax professional for more information. The return and principal value of stock prices will fluctuate as market conditions change, and shares, when sold, may be worth more or less than the original cost. Asset allocation and diversification are approaches to help manage investment risk. Asset allocation and diversification do not guarantee against investment loss. Past performance does not guarantee future results. The cost and availability of life insurance depends on factors such as age, health, and type and amount of insurance purchased. Before implementing a strategy involving life insurance, it would be prudent to make sure that you are insurable. There are several varieties of individual retirement accounts, IRAs, including traditional and Roth IRAs. Tax-deferred accounts like IRAs have conditions that must be followed, otherwise penalties may be applied. Certain actions like rollovers or conversions to a Roth IRA may result in tax consequences. Before contributing, investing, or taking distributions, listeners are encouraged to consult their financial, tax, and/or legal professionals regarding their individual circumstances.